Bueno, pues contamos con la casa Candriam. Nos acompaña Nicolas Forest. Nicolas, hello. Welcome
Hello.
to Negocios.
Hello, thank you.
So, the Federal Reserve concluded its January monetary policy meeting indicating that a potential rate hike could come in March. Powell exactly words where we are of a mind to raise interest rates at the March meeting. Why didn't they announce it for sure yesterday?
Yeah, so it wasn't really a surprise. You know, the statement of the FOMC wasn't a surprise because the message was to say we have to be ready for a first rate hike in March. But what was more new and not expected was the press conference where Jérôme Powell has been more hawkish, and today he doesn't exclude more hikes than expected, and potentially also a 50 bips hike on March. So that's definitively more hawkish than expected, and that's a game changer for the market and for the bond investor.
Mm-hmm. Powell also admitted that a rate hike in every fund meeting is not off the table. Could it be possible? How will markets react if this happens?
Yeah, so clearly that's exactly the same thing. It was more hawkish than expected. So when in terms of market, we have seen a repricing of the yield curve, and now the market is currently expecting 5 hikes for 2022. What is more interesting, in my opinion, is clearly the move of the bonds, of the US bond yield curve. Because when you look at the market today, there is a clear message, a clear flattening of the yield curve with higher short term and with performance and lower 10 years or 30 years. So this move and this flattening yield curve, I think that's a great, very important point for the coming months, because if we see more and more hikes, the risk is to see a further flattening. And this flattening can have an impact for the asset allocation and for the investment perspective.
Mm-hmm. Powell said as well that asset purchase will stop at the beginning of March as planned, and a reduction of the balance sheet is expected from the first increase. But the fund has not made any decisions yet of the timing and pace of shrinking the balance sheet. What do you expect?
Well, we are expecting, we haven't changed really our view. We are expecting the end of the program by March and the beginning of the quantitative tightening, so I mean the reduction of the balance sheet mid of the year, so something like June. So by June, we believe that the Fed will start to decrease its balance sheet. But yet, this message is also okay because it means that the Fed is ready really to tighten monetary policy. And this is important because there is a clear impact of this quantitative easing vis-à-vis all the risky assets, vis-à-vis, of course, the equity, but also vis-à-vis the credit. So now, after this statement, with this announcement of the first hike, with the potential tightening of the balance sheet, we are monitoring very closely the evolution of the credit market, and especially the US high yield, so the spread for the US companies, and the spread, for me, that's very important to follow in the coming months.
Mm-hmm. We expected yesterday some statement from Powell about Ukraine and Russia geopolitical tensions, but he only said that the situation in Eastern Europe is another worry they are monitoring. How could act the Fed if these tensions scale?
Yeah, that's a very good question, in fact. And yesterday I was surprised to see the press conference of J. Powell. And finally, what we can see during this conference is Powell is clearly US-centric. So the main issue for the FOMC today is not Ukraine, is not the situation of the virus or the situation in Europe. No, the main question for the Fed is the inflation, 7% in December. So the main message of the Fed yesterday was to say, okay, we are ready to normalize the monetary policy because we want to control inflation and inflation expectations. So the question about Ukraine is not really the main topic for the US because there is no real impact for the growth or for the inflation expectations, which is completely different for the European Union, of course. So that's the reason why the Fed was comfortable to say, okay, we are ready for normalizing, and the question of geopolitical issue wasn't really on the table.
Nicolas Forest, thank you so much for attending us. Have a nice day.